Good morning, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo! It is, where are we here? Today is Monday, TGIM. Oh boy. Just another manic Monday. 3rd of June. And as I did quite an interesting broiler chickens yesterday. It was quite lengthy, about an hour and a half or so. And then YouTube went and blew up the video. So I did and I don't know whether we can post it on the site or not, but I did actually try and I went and re-recorded I was able to actually see the video on YouTube. It just froze in sort of live streaming status. But I was able to sort of scrape together about an hour and 20 minutes of it, and I called it just like test recording. I can post this on the site. Like I said, it's about an hour and 20 minutes. I mean, it's half decent content. Oh, you did? Oh, awesome. Stuart said he already posted it. I didn't see, on the, well, I guess maybe the dashboard. Did you put it in the daily briefs? That's what this is. Did they change? Did they actually fix the video? Anyway. Oh no, yesterday. Oh, so did they fix it, or was it my sort of piece together one?
I think it's your piece together one.
Okay, well that's cool. So thank you, Stuart. I appreciate that. I wasn't expecting that. So awesome. So speaking of which, good morning, everybody. Kind of a weird way Brian starts these crazy videos. I'm sorry if I'm a little confusing here to everybody, but it is Monday morning. We're back in the saddle. It's kind of a sleepy Monday morning. Of course, the reason why I mentioned the broiler chicken show is I went into great detail about how I really am not expecting a heck of a lot out of the market for probably at least the next few weeks. I think basically that's what we're seeing out of the stock market this morning. It's kind of wishy-washy. I got to give a big shout out to Thomas, but I'm sure we'll get to that later. He picked up some silver calls, and the gold and silver are continuing their rally here. But the stock market's just stuck in blah mode. So if anything today, kind of a good opportunity for us to maybe step back a little bit. I don't think we're going to be missing any like rocketing trades here right at this moment. And we've got Jamie here today, which is so
step back a little bit. I don't think we're going to be missing any like rocketing trades here.
Hello. Sorry, I was eating. I was just just having a little munch. How you doing?
It's all good. We just have to help some of the site members put themselves on mute. But anyway, yeah. So we've got Jamie here this morning to do his. I don't know whether we call this monthly, quarterly, but his fundamental analysis report. How you doing this morning, Jamie?
Yeah, I can't complain. Nice. I've been away now. I think it's been about 2 months last time I did a presentation. I was away. So ready to get back on this on a bi-monthly basis and have some fun, look at some fundamentals. So yeah, all good. Can't complain.
Totally stoked. Love to hear that voice again. So put a big smile on my face when I saw that you were on the schedule this morning. Super jazzed. And of course, coming from downtown Vienna, driving the bus, no shirt on, but one badass with a bunch of gold chains. Alex is here this morning. How you doing this morning,
Alex? Hey guys, I'm doing pretty good. How's it going?
Good. Always better, of course, when I hear both your voices. So I love when I get to interact with site members and the community first thing in the morning. It makes me feel so happy. And as well, because it's Monday, just a sort of a kind of an FYI for you guys, just to give you a notion of how hard his job is and the amount of different projects he's working on, and sort of a status report of how the site's going, because now this Rational Investor website's turning into a beast itself. We've got Stuart here this morning from downtown Breda. Carrying a
yeah. Woo.
The only guy who claps himself on stage.
Exactly. How are you doing, sir?
I'm always better when I hear that voice. Great to hear you here this morning. And actually, look at that lounge. We got a pretty full lounge here this morning. So, mutual. It doesn't have to be mutual. This can be one way. I love you guys. You guys are the reason why I can get up in the morning, day after day, day in, day out. You're such beautiful people, and I'm so privileged to be able to do this with you guys. So thank you so much. But hugs and kisses. Mwah, mwah. Hi, Colleen. We'll give you a hello this morning. I was a little bit bitchy with you guys in the level 2 on Friday. My apologies. I've asked Zach. We're going to try and curtail the amount of questions any individual can ask so we can get to everybody. And we also talked a little bit. I saw in the TRI management room, we were getting some feedback from some of the students that things are getting a little out of control there. So my apologies, Colleen, if Friday was a little sloppy, but we did slog through it. It was a good 2-3 hour session, but we did end up trying to answer all the questions. But anyway, so I think probably. I don't think that we really need to go into too much stock market-y stuff. Like I said, you want to update on the stock market. I spent probably a good half hour, 45 minutes in that broiler chicken show yesterday and the revamped one because YouTube kind of derailed us a little bit there yesterday. But as we sort of pointed out before we got going here, Sjord, at about 10 o'clock my time last night, I went and actually re-recorded the recording of the version that I was able to sort of scrape together on the YouTube platform. I don't know whether I can do this. How do I scroll down here? All right. Well, you're not going to work. Oh, there we go. So we were able to piece together a piece for you. And like I said, I talked for probably about 45 minutes or so about seasonality and what I'm expecting out of the stock market and yield curve and stuff like that. So I don't think we need to go into too much about stock market today. I was able to talk a little bit about crypto there and specifically Bitcoin at the end of that video as well. And sort of same thing that, the message really isn't changing here. I don't know whether you agree with me or not, but I believe that crypto is pretty well correlated with the stock market. And, if we look at the weekly charts of something like a Bitcoin, all of us as technicians should go, gee whiz, that's a pretty substantial rally. So, if we have to take some time and give a bit of this back through that seasonal weakness period that we see in the broader economy, I don't think that shouldn't shock any of us. And I'd sort of suggested you can see 38.2s on the weekly chart are starting to line up with 13 EMAs. Don't be shocked, peeps, if we have to work our way back down to 7,000 here over the next 3 or 4 weeks. But one thing, and I didn't really get to it, in the abbreviated version of that video, but I did talk a little bit in the regular video for the people that were in the Hangout. There's a number of what's the best way to do this? There's a number of I guess we don't need this chart open. There are a number of how do we do this? We did the trend following, right? Over there. And I do have another one for Joshua's list, but there are a number of coins that are just now turning the corner. If I'm not mistaken, I think this XLM just spat out a trending signal. I know it's awfully tough to see with all these notes and stuff on the chart, but you can see there is TRI Bull. We just made the official shift on XLM, and actually what was really cool about XLM is we talked about this at length a week or so ago. We actually even painted like the trader's trade window, how you're going to sneak in. Look how the market came down, dipped into that window, and is now sort of waffling around here, asking, okay, well, do I really want to turn? So we've got like LJ's bigger bots working off of this, So, I mean, there are ideas out there. And actually, I was really pleased that when I popped into the lounge the other day, I noticed that there was lots of people popping off doubles on things like Mona, if I'm not mistaken. It had a really nice pop. We'll just quickly show you. This is the season for this kind of stuff. So, just be darn sure you've got your plan in place. If you want to nanny nibble this kind of stuff, make it really simple. Just keep banging out doubles. Just slowly build your capital base. Of course, we have to deal with Trex issues, so be cognizant of that. And if I'm not mistaken, this okay. You can see it was up on the top of the list. Big popper there. Thank you, Kevin, for reminding me. Okay, look at them all coming out here. QRL, SIB, right? So, there are doubles to be had. SYNX, thank you, Joshua. So, just get out there, build your plan, try and buy against the bottom end of lows, bottom end of ranges, all that kind of stuff. And, this is the season. You've all been waiting, especially when we go through like October, November, December, when the stuff is all on its knees and you're like, oh God, I got to be patient, got to be disciplined. Well, this is now sort of harvest time. You planted your seeds back in the fall and the winter, and now you should be just slowly cultivating your crop. So way to go, everybody, on those. And I was so pleased to see people in the lounge banging out doubles and all that kind of talk. So I won't go into too much more detail about market because we have all these awesome reports. So where should we start first, Mr. Mayor? Should we release the Lego Man first?
I guess so, yeah.
All right, Mr. Lego Man, are you ready for your report? Guess we should probably ask him, eh? Sjord, are you here? Nope, not here. Okay, well, that was fun. All right, maybe Jamie, why don't we start with you today?
Well, why not? Okay. Yeah, no worries. Well, let's get the show on the road. I'll just screen share, sorry.
Okay.
Right.
Kind of that was a bit of a short notice transition there.
Sorry, I'm here. My mouse was freezing and I
no
couldn't
problem
click the unmute.
Okay.
Okay.
Okay, so
Okay.
Jamie, before you get going, Sjord's
Yes.
report's usually only about maybe 5-10 minutes or so tops.
Yeah.
So why don't we do Sjord's and then we'll release you, okay?
Absolutely no problem.
Okay, sorry to tease you like that. Okay, Sjord, you've got the mic. Mouse is unfrozen.
Yeah.
So you need one of Shane's cats around there to wake it up, eh? All right, and actually, don't you have cats too? I thought you had cats as well.
Yeah, we have 2 cats.
Yeah. Okay, so Sjord, you've got the floor. We are showing your handsome mug. I don't know if you want to screen share. Now we're showing pants. All right, well, that's good.
Exactly. Yeah, so this was something that I posted in the lounge over the weekend. But I had this exactly. I had one big short on this weekend with degrees of up to 30 degrees. So working in the garden with my shorts, it was awesome. And what we did over the last week for the website was we did some adjustments for search engine optimization. I worked a bit on the algo course with Reza. We did some coin payment integration optimizations, and I see that some users already use the coin payments instead of PayPal. So that's very cool to see. And that's going smooth instead of PayPal. So we still have some issues with PayPal, but I have good hopes that we will get them resolved soon. I fixed some errors, and we added the functionality that we can now add custom trading plans on the website. There isn't a custom trading plan yet, but I will work with Ryan over the coming weeks to maybe get one going. So we now have a place to report those besides all the other little old lady trades.
Is that on the developer dashboard or is it on the live site yet?
It's on the live site, but I didn't create any trading plans yet. So it's limited to admins at the moment. But there's room for us to write a trading plan and to show all trades below the trading plan. So that's
Okay. Yeah. Well, maybe you and I should schedule a meeting, just you and I, and go through all this.
exactly. Yeah.
Okay.
And I wanted to keep the site update relatively short because I had two other things to say. So one is that I wanted to give a quick update on my dollar cost averaging program of BTC. That's something that I wanted to do for a couple of weeks now, but I kept forgetting. So thank you, Alex, for the reminder today. So I made this spreadsheet, and basically, as it turns out, I suck at dollar cost averaging. Because the idea was that every time I spent the same amount of money to buy BTC, and I should do it on the exact same time. But I really didn't do it. But what I did do was I tried to do it. But as you can see here, for example, these dates, it was more like, okay, I have something to spare now, so now I can buy something. Without really waiting for setups or checking the screen, I did try to dollar cost average it, so that each month I came up with around the same amount as other months. But then I compared this to when I would have actually really dollar cost average with the same amount each month. And then you would be sitting now at a 62% profit, as opposed to my own dollar cost averaging process, which is up to 37%. It's not bad either, but this clearly shows two things to me. One, dollar cost averaging works, and the second is that if you really follow the dollar cost averaging rules, you would have done a lot better. So I think it was.
I don't understand. Where's the disconnect? It's you didn't buy enough when you were supposed to buy, or you bought too much? Like, I don't understand.
So the disconnect is that I didn't I didn't spread my buys, and I didn't use the same amount each time. So for example, one day I used $60, and then the next time I used $40. One week I bought on Monday, and the other week I bought on a Friday, which was 2 weeks later, something like that. So I compared it.
I mean, I wouldn't beat yourself up, but I think you're right. And keep in mind, we sort of paint this image like we're perfectionists, like, oh, this is no problem. You can, go find location, divergence and structure and bang out the trade. What's the problem? But actually, reality versus sort of a hypothetical. If anything, this is a really, really good exercise in the difference between, and this is why I always talk about it's so important if you're going to build algos. And Reza, we've talked about this with you and Andrew. If the difference between back testing and actually forward testing, like real-time testing any strategies, it's like night and day. And if anything, I think this is an excellent testament to, it's one thing to say that you're going to do something. Now let's see what actually happens in reality when you try and do this. So that's a good exercise for you.
And I know that there are services out there where you can basically deposit euros or dollars, or even have them credit your account automatically, and they will do the buying for you on a fixed day, a fixed amount. But of course, they take a 1 or 2% fee.
For a fixed fee.
Exactly. But I mean, to go with the little old lady, I think this would be a great strategy if you want be long crypto, long Bitcoin, long term. This works fine next to your trading portfolio or next to little old lady.
Absolutely.
Yeah.
If anything, ironically enough, what you really want to do is you just want to remove the emotion from the entire equation. You believe in the story, you're trying to accumulate. You're just going to simply put yourself on a plan that instead of, you actually, deciding whether the market's a buy or sell, you're just going to go in there and accumulate.
Yeah. And for example, it's very hard now to justify buying because I also feel like we're going down, but I should just pull the trigger today or tomorrow again to nibble a bit. But it's not hard. Even
The good
or-
part about a plan like this is you actually are rooting for the bear. You
Yes,
want the
that's
market
true.
to go down so that you can buy more at a cheaper price.
yeah, and if it goes down, you'll be like, woohoo, more Bitcoin. And if it goes up, like, woohoo, more dollars.
Instead of, like what ends up happening most of the time is people are like obsessed about the damn thing going up.
Yeah.
And if it goes down, then you're all depressed. So it's a great way to sort of turn the equation around.
Yeah.
And it's interesting, James, I think you're relatively, I don't know, James Bonney, are you relatively new to the site? This is a little different way of participating in the markets. We're not, like when you do little old lady, nanny nibbles, dollar cost averaging, ironically enough, you're turning the equation around. And you're not really actually that concerned about timing your purchases. You actually want to remove the emotion from the equation completely. So it's a little different perspective. And actually I like how Sjord is forcing himself to go through this process to learn what actually it does. So way to go, Sjord. Actually, thank you very much for that update. That's really cool. Good stuff.
And in my spare time, I'm setting up a Lightning node, which is up and running now.
Oh, good for you. Excellent. In his spare time, like you have any spare time at all.
It's more like when I have to wait on stuff, then I can tinker with the Lightning node.
It's like Reza. When Reza has spare time, i.e. sitting between 4-hour candle signals, he's off driving a truck around North America on his computer. There he is, driving my truck.
Excellent.
All right, that's cool. So you have a Lightning node up and running. That's choice.
Yeah. So if anyone wants to open a channel with me, just open or send me a message, and we will get that going. But it's mostly for me as a learning experience. There's still a lot to learn, and I'm basically, it feels like 2012, 2013 again, where I'm trying to understand Bitcoin. That's a bit how it feels now.
Really remarkable how the landscape has changed so much, eh?
Yeah, and Shane, that's actually what I want to do. If I figure this out a bit, I want to create a TOI Lightning node and use that for our payments as well. But at this point, the chance of me losing funds is pretty big, I feel like, with running an own Lightning node. So it's best to keep it in a test environment at the moment.
Right. Well, as Shane would always say, the best way to learn about something is to try and break it.
Yeah, and that's not hard with Lightning. I succeeded in doing that a few times already. So
when I was over at his place, I grabbed a sledgehammer and went at it on his ETH mining, and he didn't like that at all. Kidding. Okay, so I don't know. Is there anything else you want to share with the community while you've got its attention here this morning, good sir?
No, that's the update from Breda, the Netherlands.
All right, thank you very much, sir. Go and have a cold shower, and maybe we ought to buy you an air conditioner for that little condo or something. But take it easy, bud, and we will see you next Monday for your report. All right, Jamie, I don't know, didn't mean to tease you there earlier, but you're up on deck next. Do you feel like rocking this thing? I see you are muted, so I don't know whether you know that or not.
Don't worry, I can hear you. Yes, let's do it.
Yeah, you can always hear me. You probably hear me in your sleep, but we couldn't hear you.
Yeah, I wake up with, way to go, dude.
Well, I could say worse things, I suppose. All right, I'm going to shut that all up myself on mute. Jamie, you've got the floor. And actually, I love hearing from Sjord, but you're the main attraction. I got my popcorn ready. Teach me something here today, sir.
No problem. But first, the disclaimer. So there we are. I just wanted to say, because over the weekend we had the TRI UK meetup. So thanks for everyone who came along. It was actually quite a relaxed meetup in comparison of previous ones. So we were all sober enough to talk about the markets and anything at all night, to be honest, and actually remember and know what we're actually saying. So no, it was really nice. So yeah, so to everyone who went, nice. And for everyone else, I'll get another one organised again in 6 months' time. We might look at changing the location, maybe going further up north this time instead of just London, just to mix things up. So yeah, it was pretty good. So I mean, when's your meetup? Is your meetup the end of next month? Is it?
Yeah, the end of July. We got like 20 or 30 people all wanting a place, and we probably have a good 10, 20 people here locally. It's going to be a zoo. We're going to hit Vancouver hard.
Oh my God.
We're gonna, I was thinking booking day fishing trips, but we're going to need a goddamn tugboat to haul all these people around. Colleen just wants a quick who's is who. Can you just go through the names?
Yeah, so you've got left to right. You've got Mike on your left. You've got Julian. So it was quite funny because we didn't have the Brian masks. I didn't really think it through.
Well, thank heaven.
So we were having pints at the bar, and then I was like, how are people gonna know who's who? So we just like randomly shouting yeah, Brian. And then all of a sudden people came from the teams and we just started walking towards us.
Okay.
So yeah, and then you've got Warwick. Then after Julian is myself. Then you've got Warwick. Then you've got Bud, and you've got Ralph. Raf, sorry. So the Rafster, of course, always brings the party as soon as he comes with this massive smile all the time. So no, it was really good. We ended up just literally having a couple of pints and then go for some food and just chatting the whole time, which you don't really get to do, to be honest, on the previous meetups, because there were so many people on the previous meetups and they got pretty loud. So
yeah, well, we're going to release the RAF on Vancouver. Now, this should be a really interesting experience.
Yeah, it wouldn't surprise me if he was saving himself for Vancouver, to be honest. So I'd be careful. He's ready.
This is the before picture of RAF. Colleen and Alicia, it'd be interesting to see the Vancouver RAF. But I'm all ready to introduce him to BC's finest product. He knows exactly what I'm talking about there. Anyway. All right. Yeah. Brian, shut up. Jamie, continue on, please.
Yeah. So really good. Today, because I haven't been here for a couple of months, so I thought I'd just catch up on a couple of things, just to recap over things that I've either presented before or things that have gone on basically over the last couple of months. That will have affected the market for specific reasons and will affect the market basically in the next couple of months. So it won't be crypto based until towards the end. So we'll go over, I suppose, even though I hate talking about Brexit, we'll have to go over it anyway. Then we've got the China-US trade war, so we'll talk a tiny bit about that. The change in macro fundamentals, and then we'll go over the Bitcoin fundamentals that I actually went over in March. So I thought I'd just update on that since, the market has changed a little bit since then. So I'll be as quick as I can.
You don't need to go fast. Just go nice and slowly.
I know, but I'm just looking at the time, and I know it's all about that crypto hype. So I'll just quickly get through it in the.
No, go slowly. This is really, really good stuff you put together. Just go nice and slow. There's no hurry.
Oh, okay then, guys. So, so to start with the UK. So obviously, we would have delayed it while I was away. So now there's no exit date until the October the 31st. The biggest changes that we have is, of course, that I believe it's the 7th of June. Good old Theresa May is leaving. So what we'll be having now is inside of the Conservative Party, there will be nominations for people who want to basically be the next Prime Minister. So they will have to come forward and they have to get a sufficient amount of votes from so many MPs from the 10th of June. So as soon as the 10th of June starts, then basically there'll be rounds up until mid-July, which is basically when there will then be round after round until they'll dwindle down just to 2. And then all party members within the Conservative Party will then vote for the last 2. So, I mean, what does it all mean for the markets? Well, I mean, we could look at the US market and we could see how complacent I think the market has been over the last, you could say for the last 6 months, to be honest. In a similar situation instead of Brexit, obviously you've had the China-US trade war, which the market had priced in more or less for a deal to have been done. And then obviously we haven't had a deal, and that definitely looks like it's a lot further down the road, but I'll talk about that in the next slide. So for the UK markets and possibly globally as well, because you have to remember that most of the FTSE companies are not UK companies. So the FTSE 250 is a better representation of the UK economy. The FTSE 100s isn't, to be honest. You want to look at the FTSE 250, to be honest, if you want to look at the broad UK market. Basically, it all depends on the type of Prime Minister that gets in. At the moment, people are obviously going for the Mr. Boris Johnson. People are thinking Boris Johnson's going to be the next Prime Minister. So it's all about the views of the people who are putting themselves forward. Of course, Boris Johnson is a Eurosceptic. So what that will do to the markets if he does get in, and obviously the way he wants to basically, with everything going on, how he wants to negotiate, or even just say we don't want to bother and we just leave. Obviously, this is all going to be very volatile towards the markets. So it's something we need to look out for now, more or less over the next month, to be honest, as we start dwindling down to so many candidates. We then will get a better representation of, okay, how many people who are more Eurosceptic are going to be possibly going to be the Prime Minister, and how many who are more to stay in. Because that's where it will all come down to. So that will affect the markets. And then there's a good article to explain the Brexit scenarios. So I'll pass that in at the end of the presentation. So that's the UK front. Any questions, Brian, if you could let me know, because I can't actually see the screen for the Hangout, because I've only got the 2 screens. So
Okay, I'll keep an eye on that. You're kicking butt. The only question I would have is, do you like Boris's recent hairdo?
What was the recent hairdo? It's always the same, isn't it? I mean, as long as it bounces around, you go, then it's the same, man.
I don't know. I was just being facetious.
Imagine 2 great haircuts in one photo: Mr. Donald Trump and Boris Johnson.
Yeah, there you go. And if I'm not mistaken, I think he's actually American, isn't he?
Yes, I believe so. Yeah. I think is it his mother? Is it his mother's side? I think that's American, or. I mean, it's the same. I suppose it's
being cheeky. For anybody who doesn't know, Boris Johnson is, I don't know whether I got his name right or not, but he's follically challenged. I don't know whether he actually even has a hairdresser, but he's a character. I mean, the funny thing is we always say you can't write better fiction than reality. I mean, if somebody had 5-10 years ago said, well, this is going to be your country's leader, I'm sure a lot of people would have been like, you got to be kidding me. And here he is.
Well, yeah, definitely. I mean, he tried it in the last one, but he pulled out. So in 2016, when David Cameron was Prime Minister, he got in. Was it 2016? No, sorry. Previously, he tried. Oh no, it was 2016. Yeah, he tried to when David Cameron stepped down, he tried to run it, but he wasn't very well placed or organised to actually try and go for it, so he pulled out. So people are saying that he's a lot better organised this time round. So yeah.
And the point here is that the right-wing Conservative Party is still going to be running the government. They're just going to have a different leader. Is that correct?
Yeah, a different leader. But it's all about the sentiment of the Prime Minister. I mean, Theresa May is actually a Prime Minister who voted to stay within the EU. So to then have a more Eurosceptic Prime Minister, I think that's where you're going to get more volatility from the markets. I mean, it definitely depends on how they will state it. That's when the comments come out afterwards. So yeah, it's going to be an interesting one, but I mean, it's just going to be like the China trade war, to be honest. It's just going to lag on and on and on. And I mean, over time, I mean, you're starting to get things that are coming into the markets now that are actually affecting companies, which is in the
Well,
end,
and
it's just
that's
going to
the
end up
thing,
in
right?
recession.
It usually it takes about 6 months or so for this stuff to like for policy to actually start affecting companies.
Yeah, exactly.
This has been dragging on for a few years now. I would imagine you're probably going to start seeing the actual effects of all this in the actual UK data.
Yeah, there was some poor data that came out. The PMI came out today below 50 for the UK.
Ooh, did it really?
Yeah, so that was quite a surprise. It was forecasted at 52.2. So yeah, I mean,
Okay.
we shall see. Obviously, we've got Trump in the UK today as well, and I believe tomorrow.
Oh, is he over there as well? Oh boy.
Yeah, so he got the whole salute with the Queen. He got the whole states visit. So he got the whole shebang. So he was living life.
I think it's interesting that. Does the Queen ever weigh in on any of this stuff, or is she just sort of mute about all?
No. You very much muted. I mean, the Queen can have if there's literally no resolvement in Parliament in one specific issue, the Queen can actually have the last say if all tears apart, basically. But as well with Trump, don't forget that. I mean, he doesn't say it much, but obviously his mother's Scottish as well, so it's going to be a lot. I think it's a lot more important for him to be here, seeing the Queen, etc., compared to previous presidents because of obviously the tie he has with Britain. So yeah, his mom's Scottish, but he never says it. So that's the UK. Going on to China, that's been the fun point, and as well on top of that, I mean, all of the opportunities that have been coming and still are coming in within US companies or any companies that are exposed to China for that matter. I mean, yeah, regarding the China-US trade negotiations, as I said previously, I mean, the market definitely priced in for them to resolve something in March. It didn't happen, and if anything, we're looking a lot worse off than in March. So, I mean, yeah, for anybody who wants to look at positions within the stock market, try and look for any company that is definitely exposed, any US company that is exposed globally. So then you're looking more from a macro perspective. Okay, and then, yeah, I mean, China have now come out, I think it was yesterday maybe, or early this morning, they came out with a hit list now. So they've started writing a hit list of American companies that they want to review. Obviously, Thursday you had, I believe, Tom was talking about the Dow, which made me think about looking at some transportation companies. So then over the weekend, obviously FedEx had problems where they diverted Huawei packs to different places, which was completely wrong. So lots going on. For anybody who doesn't really know what's going on, it's just going to go on for a very long time. China are in no rush, and yeah, I mean, they can happily wait out and see if Trump can win the presidency. But the longer this goes on, the more volatile the markets get. So,
watched a really interesting documentary on China, and actually, I really like the people in the States. They do the PBS public broadcasting. They do this show called Frontline. And I don't know whether you can see my screen. I'll throw it in the lounge. Really, I mean, it's a really good documentary, a very pointed, sort of non-biased. I like how Frontline does sort of non-biased reporting. They just sort of, they're just, what is the story? Fascinating story, and I sure learned a heck of a lot about this whole China-US relationship. I'll post this in the lounge.
Yeah, please, that'd be wicked. I'd love to have a look at that.
Yeah. Really, it was a really good documentary. I have to say, really good. And there's on top of the fact that there's this ideological difference between sort of state-sponsored capitalism, quasi-socialist capitalism model, which they're trying to build out in China. Versus the American model of capitalism, state takes a very backseat role. But one message that I got out of this documentary, which really surprised me, was one of the reasons why this situation has gotten so out of hand with China is that the American political system is dominated by U.S. corporations. I mean, we all know that. There's no point in bullshitting about that. The politicians are owned by the companies. And the message I kept hearing over and over and over in this documentary was blatant, what's the best word to use? Coercion, maybe? I don't know whether that's the right word. But in essence, the Chinese had a plan to basically try and get as much technology and information that they can out of the West. And if you want to do business in China, you have to play by their rules, which means that, if you're a manufacturer or a technology company, you have to give them your technology. And the American companies had case after case after case after case of, absolute, basically state-sponsored extortion, if you will. You either do this or get the fuck out of our country kind of thing. Mm-hmm. And the American companies consistently went to the politicians and said, this is what's happening, but don't tell and don't mention our name because we're scared as shit of the Chinese saying, get out of our country. And of course, that closes that business venue. And the American corporations are all about profit, and they're all about, the shareholders are driving the actions of the boards of directors. And in essence, the companies themselves handcuff the politicians. So this is a message that I don't think a lot of people in the public ever hear, is that the American companies themselves knew about this espionage. They knew about all the, the extortion. They knew about all this, but at the same time, they told their politicians, but don't say anything about this. Don't mention our name. Don't mention this case, because then the Chinese will tell us to get out of the country. And in essence, the American politicians were handcuffed. They couldn't do anything about this situation because the companies themselves said, don't do anything. Isn't that interesting? That's something that's not talked about in the public, but it was a really interesting takeaway I got from this documentary. I think it's in everybody's interest to watch this. And I think what we have to actually think about now is China absolutely loves to use these big events. And like the 2008 Olympics, I remember I was a broker through the whole damn thing. That was the whole sort of, resource economy building out, and commodity prices. Copper was at like $3-4 a pound. The mining companies were all going gangbusters, and the stock prices going through the roof. And then literally the day after the Chinese Olympics in 2008, they pulled the plug and the whole fucking market collapsed. And I believe that the Chinese now have a very specific plan in place, and they call it China 2025. And their stated goal is they want to control 90% of all of the world's commerce must be tied somehow through China. I thought that was fascinating. So I think we can all, as economists and as market participants, I think it behooves us just to watch this and understand what sort of China's motivation is. And then I thought it was really interesting. They had a trade show that the little frontline journalist went to in China, and they didn't even give a shit about American tariffs and all that stuff. And all these companies, European companies, Asian companies that are outside of China, they're all coming in and bidding for jobs and stuff like that. And they, the people on the ground in China were like, there's tariffs going on. Well, the United States, that's a 20th century country. We're not really interested in them anymore. I thought that was fascinating.
Well, that's exactly it, isn't it? I mean, there's no ifs or buts, but when China will be the superpower. I mean, you could arguably say they nearly are now. I mean, if you look at GDP projections.
One of the guys through the interview said, well, like China, just take the population. China's population is like 3 or 4 times the size of the U.S. shouldn't then by definition the Chinese economy be 3 or 4 times the size of the Americans? And he actually makes a pretty valid point. So anyway, I don't know. I'm not necessarily endorsing China. I see somebody in the lounge is already like, well, Chinese totalitarian regime is evil, blah, blah, blah. I'm not endorsing anything here. What I think as traders and as economists is we just need to take like a non-politically biased look at this and just say, what the hell's going on here? And can we get a sort of a better idea of what's going to happen going forward? I understand there's, it's all ebb and flow. There's peaks and troughs. But I do believe that this shift that happened through the 2008 financial crisis, they even said in this documentary that prior to that event, the Americans would go to China and the ambassador and company officials would have instant meetings with their leaders. Now, when they go to China, they're lucky if they get some mid-tier bureaucrat that they meet with. So the whole Chinese philosophy towards the United States and I guess, the West has changed dramatically through that transition in 2008. I mean, a really good documentary. I think everybody should watch this. So anyway, I'm sorry I completely derailed you there, sir.
No. It's always good. It's always good. Valuable information. And I mean, it's exactly, I mean, no matter what happens politically, you need to know what's going on because politically these days it does move markets. So I mean, trade wars moves markets. So our job is traders. So how do we make money from it? How do we look 6 months in advance of how the economy is going to look, how each country is going to be, moving the chess pieces to another country, and how is that going to affect their economy or sector? So you've got to know this stuff. Whether you like what a country does or doesn't do, it's all just down to the markets at the end of the day. So I mean, if you're here as a job, you've just got to put that to one side. Okay, what does this actually mean?
I would say it's very similar to like crypto. I mean, there are a lot of people, and especially a lot of, like a lot of my prop firm guys were like, you're going to do Bitcoin? What the fuck is that? Why are you wasting your time on that nonsense? Well, there was a hell of a lot of money to be made there in crypto. So, you could bury your head in the sand and just say, you know what, I'm not going to acknowledge this stuff exists and let the market go by. But, if we're traders and we want to make money from trading, we really don't have that luxury. I mean, you got to know what the hell's going on in the world and be exactly, yeah. Anyway, I apologize again for interrupting, but good stuff. Can you continue on?
Yeah, definitely. No, it's no problem at all. But it's right. I mean, I think that's the beautiful and the horrible thing about studying the markets is that you become so knowledgeable about the world and you become so knowledgeable about its different sectors and how money works and moves. But at the same time, you're so conscious to every little thing that goes on that it takes a lot of work to try and, not get emotional, I think, if anything. So yeah, it's a very good point. So we'll move over to the change in macro fundamentals. So for anybody who doesn't know, I did put this up in March. So this was basically just me looking at forward indicators and then just plotting them on a chart, simply enough. So the blue circle would be the 10-day 2-year yield curve goes below 0. For anybody, I'm sure the people who come on here on the Mondays would know that the manufacturing index, when it goes below 50, which basically signals a contraction in productivity. And then you're looking at the University of Michigan Consumer Sentiment Indicator ends down violently, and then a 21 EMA crosses. The reason why I've put it on is simply because over the last couple of months, we've had a lot of, obviously the rest of the world has had some very bad macro data, but the US has been able to soldier on for quite a while. At the moment, we haven't had any of those signals. So we've had them in the last 2 recessions that have come, but we haven't had them yet, any of these signals. But I think we're definitely not too far away, to be honest. I mean, these things do happen very slowly, but we're starting to see 1 or 2 signals now of definitely declining. I mean, you can read it. I like to read companies' transcripts, and talking about the China negotiations, they're definitely having massive effects on companies now. And I think a lot of analysts were a little bit caught out and definitely did projected things a little bit too high. and this is where we're going to be starting getting some corrections now. So from that point of view, we're still, if you're just looking at these 4 simple indicators, then things are still ticking along, but obviously we have to be aware of everything that comes out on a daily basis of forward indicators and what this means, etc.
Is that the U.S. manufacturing index? Because didn't you just say that UK manufacturing went below 50?
Yeah, so this is the S&P 500. So this is for the US. I personally just look at the US market simply because, well, I mean, it's about 32% of the world's GDP. Is it 23%? So I always look at the US. I mean, yeah, the UK is of course important for its own country. Every country's statistics are very important, but I mean, to really stomp the ground and say, okay, yeah, recession is very close. I always look at the US. It's very important. I mean, the UK is around, I think we're looking at around 4% of the world's GDP. So, I mean, from a world perspective, is UK a big player? Absolutely not. I mean, it's US and China at the end of the day. So from that point, I thought I'd just go on to it. And then talking about the Dow transports that Tom was talking about on Thursday. So we're starting to see the Dow transports definitely want to go down. I'm sure for people who've done the lessons with Brian, so Dow transports is basically services and goods that basically get transported around the US. And the US is a very consumer-driven economy. So I've been looking at the last few months, I was looking at retail, and then after Tom as well talking about the Dow transport, so I was like, oh, well, let's have a look at different transport companies such as FedEx, UPS, and then reading into some of those calling transcripts were quite interesting because a lot of analysts were getting very tetchy, to say the least, when these executives were dodging questions in a very political manner. So another thing to keep an eye on.
The transport companies executives?
So like the executives of
can you guys still hear Jamie? I lost. Jamie, I don't know whether you can hear us or not, but we lost your audio. All right. He kept us maybe while we wait for Jamie to get back. I can throw on the transports, and actually I love using this this cute little slide to sort of tell us a little bit about the happiness or unhappiness of the market. You can see when the market fully bottomed here back in late December, early January. Is he continuing to chat away there? I hope we didn't lose him. I don't know whether Jamie can hear us or not, but anyway. You can see this is the Russell 2000 small caps, right? They bottomed, and then you can see IYT. This is the in yellow. This is the transport. So you can see how the whole economy is kind of rolled over here, and the transports are actually leading the market down. That's never a good sign. The spread's actually gotten pretty wide here, hasn't it? But, also further anecdotally, what's the Russell 2000 doing? And the small cap stocks, the spread between the small caps and the large caps. Maybe this thing can bottom. Maybe it can W, but it sure looks like that's awfully early. And that's a pretty big assumption right now. And considering, they sell in May and walk away kind of thesis, there's just not a heck of a lot to get too excited about here on the long side of the market. And remember, we talked about this. Joshua, I love Joshua. Joshua's got such a great sense of humor. So he just posted this in the lounge. There's Jamie. Do you remember that? I remember when that was actually on TV. That's the scary thing. That's how old I am. But I remember those are so funny, the roving reporters of Al Franken. And, he actually went on to become like a U.S. senator. Isn't that incredible? From like the great state of Minnesota or something. So, but I think if I'm not mistaken, he got run out of Washington on a sex scandal. But anyway, okay. So, what is the message here? Transport's leading Did you guys hear correctly? He was saying something like FedEx got themselves into some hot water here over the weekend, and then maybe that's what he was making reference to when he said that the executives were dodging the issue. But anyway, you shake it here. There's just not a heck of a lot to get too excited about, but also to remember seasonality, right? So it's not, on top of the fact that we have all these macroeconomic events, trade wars, all this kind of stuff, we also have to understand seasonally this period, sell in May and walk away. Usually the market's soft into late June, early July. One thing also too, while he was chatting away, I noticed was, do you guys see how, first off, maybe a nice yield curve update. There is the U.S. short-term interest rates. There's the 2s and the 5s and the 10s. There's the 30s up there. So now we got about 20 basis points until that curve goes full inversion. It's probably a really good proxy as to what we should be expecting going forward. Hopefully everybody can see pretty well-defined M in the inflation-deflation gauge here. Implying that we're heading back into sort of deflationary, or the economy is contracting kind of mode. So I did actually, for the first time, I don't know whether you guys saw this, but JP Morgan came out and said that now, and it just goes to show these talking heads, I mean, they change their minds so quickly and so often. Now what I'm hearing is the market's actually expecting the Fed to cut interest rates by two notches by the end of the year. I still think that this is our best sort of gauge to try and get a feel for what short-term interest rate policy is going to look like. Because keep in mind, kind of like what I said about the politicians, the corporations run everything. Eurodollars is technically the corporate interest rate market, or basically what the market's rate for borrowing short-term money is for everybody other than the government. Fed funds is that body that they created a whole bunch of bankers called, in the States, their central bank called the U.S. Federal Reserve Board. But long and short of it here, Eurodollar market has actually been trending higher for quite a while now, i.e. lower rates. And we sort of talked a little bit about this recently, that this trending market state now in Eurodollars is actually giving the Fed some wiggle room. And then we also talked recently about spreads. This is the TED spread. Now I guess we have to call it the Fed spread. And the Fed spread is basically saying that, there is no credit crisis right now. If anything, the Fed's got lots and lots of wiggle room. They could let this expand a little bit. And frankly speaking, I'm not even quite sure what would happen if this actually went negative. But you can see we're trending lower, and those corporate short-term interest rates are ratcheting up here. So ironically enough, and I think we've sort of talked about this recently, is that that Mr. Trump might get what he wants, where the Fed actually starts lowering interest rates. It's totally possible. I mean, we all know what W's do. So very interesting developments happening here in the market with regard to interest rates. Did we have Jamie rejoin us? No, it's James. No, that's okay. Well, maybe we'll have to do the rest of Jamie's presentation another day. So writing's on the walls. Yield curve hasn't inverted yet, but it definitely looks like it's heading in that direction. Deflation is now taking over. I don't think we have to worry about inflation right at the moment. The interesting thing about this is I think it actually comes back to almost like a confidence conversation, where and where's the best screen to show you this here? I think you can make the argument that the U.S. dollar, has been enjoying one heck of a bull market. We've been sort of musing about how the U.S. dollar was going to act up in this reload zone. There's Mountain Man off of this massive range. Let's see if I can zoom out here. All right. So if we put this into historical context, it really shouldn't surprise us that the market is getting kind of exhausted up in this area. Could we have a nice serious test of 38.2s here? Sure, that's totally possible. One thing actually that jumped out at me that I haven't seen in a while is that our Dow gold ratio is actually starting to move back in. Whoops, that's not what I wanted. It's starting to move back in gold's favor. We haven't seen that in quite some time. Where the heck is that chart? Thought I had it around here. Yeah, right up here. So, with the stock market being as happy as it is interesting to see that maybe we might be emming out here. And I noticed, and I don't know whether it's maybe the euphoria of crypto is wearing off. It's tough to say. But I noticed that the gold itself is actually enjoying a pretty nice market here right now. And it's kind of ironic, that we've been sort of talking a little bit about, the end of the seasonal trough, which actually should come somewhere in here, June, July. And this gold market is just taken off like a rocket here. So keep your eye out for the gold stocks. Something, though, that bothers me about the gold stocks is, and this is kind of like what I did with that broiler chickens. Is this kind of growth rate for any kind of price action? Is that natural? Is that sustainable? I'm a little concerned that this might be a little too far, too fast. But, I don't know when Thomas is on the show next, but he did say that he went and picked up some silver call options. So congratulations on that, Thomas. One thing, though, that I did notice that sort of leads me to believe that maybe this stuff needs to come back down to earth at some point in the future. I thought I had it on here, but let's see if I can find it. Where is it? Sectors. The gold and silver stock indexes. I personally don't think that this is sustainable, right? We're gapping higher. At some point, we're probably going to have to come back down and fill in these gaps. This just looks a little too far, too fast. But we'll see how that goes. Hey, Jamie's back. Should we give this another go, sir? Does he have a microphone this go round? You are muted. All right, maybe we'll give Jamie a moment here. Yeah, well, on top of the fact that we have this stock market uncertainty, keep in mind that the gold market, how do we say this? Two things. First off, it's entirely connected to the US dollar index. And you could make the argument that, these commodity prices are technically priced in US dollars. So if you have the US dollar itself coming off here, then that sort of can justify commodity prices catching a bid. And he's back. Does he have a microphone this time? Nope. All right. Well, we'll leave Jamie just for the time being. So, as well too, we should look at this chart and we should say, oh boy, this candle, and this candle. Does that make any kind of formation that maybe we've seen before that traders should be maybe aware of? Hopefully everybody goes Empire. Very good, Mike. Excellent. So it kind of looks like the Empire State Building here. So that's a bearish sign. I'm sure there are a lot of people that saw that over the weekend and went, oh, don't like the look of that. You guys have heard me talk recently about the correlation between the yen and gold. And of course, yen's doing very well here. Huge run up, big W's within W's. And I think actually, too, this is a really good example of a cup and handle. So we can go boo to boo to boo. There's the cup. And here is the handle, like so. So this is actually a very bullish chart pattern. So on top of the fact that US dollar looks like it's topping out, we also have, it looks like the Japanese yen is put in a cyclic bottom. And in a weird sort of way, like through the 2007-2008 financial asset crisis, everybody ran out of US dollars because nobody had any faith in the US economy and it growing. And then that brings into question, short-term interest rates. And we just heard out of Joey Diamond this morning that JP Morgan's expecting the Fed to cut interest rates now. I actually have the impression that if there's uncertainty about the system going forward, people actually fly into the yen. The yen actually, interestingly enough, I think has become sort of the flight to safety, safe haven currency, which I find fascinating. And then finally, on top of that, let's see if Colleen can remember this. If we have one particular part of the commodity cycle going up, what should that imply about the other end of the commodity cycle? Maybe going down? And our relationship between energy prices and metal prices. Does that sound at all familiar, Colleen? So, we had energy prices themselves collapsing here. And usually in this kind of environment, the gold market actually does fairly well. So there's a bunch of moving parts here. There's no doubt about it. I think that, clearly stock equity valuations as a proxy of the economy are coming into question. The US dollar itself is coming into question. Unfortunately, the politicians in the United States, they're not really endearing themselves to attracting a lot of foreign investment right now. If anything, they're kind of telling the world to fuck off. So, in that kind of environment, it really shouldn't surprise us to see, money fleeing out of the United States, especially in the fact that maybe the U.S. economy isn't that great. And maybe I'm going to go put my $1 million, I'm in the middle of Botswana or something. Where am I going to put my money? Well, maybe I'll go and park it in yen instead of in U.S. Market for the time being. And, as well, just general uncertainty in general. I think that that's helping the gold bid as well. The problem that I have here, and this is what bothers me a little bit here, is this could potentially, we have to be very, very cognizant of this. Not quite sure where I want to start this, but if we go boo to boo to boo to boo, if we stall up here at 78.6, and actually I think it might even be 88.6. If we go on over to the library, this is where all the harmonics, right? Raf was on the call earlier. He loves harmonics. And the FYI to the level 3ers, Raf said that he would come on and do a harmonic presentation for you. So we've got that to look forward to. But our cheat sheets, I noticed that, and this was kind of bugging me. It was kind of picking at me over the weekend. The bat pattern, you can see 38.2 to 50%, 88.6 on the B to C off of that A, and then a counter trend rally to 88.6. I'm worried here for the gold bugs because this move was so far so fast. I'm a little bit concerned that maybe this is actually setting up a harmonic here. Where the hell did the damn chart go? There it is. So as we had said just a moment ago, 30, off of the peak here, 38.2 to 50%. So that's 45.4. It falls into that window. This A to B to C, right? Ideally, we want this 88.6. I don't know whether we want to go off clotheslines or intraday. So it was 95.6, a little bit more than I would have liked to have seen for a harmonic. If we go off of clotheslines, a little bit closer, but nonetheless, we did not break to new lows there. So we have to keep a really close eye on how gold acts up here at this 88.6. This looks a little bit suspicious. So, and the simple fact of the matter is that is a substantial move higher in the gold price, just over 1, 2, 3 trading sessions. I mean, that's a pretty big jump. So I'm a little bit concerned. Let's see how gold acts up at this sort of 1340, 1350 area. If this is not a harmonic, we just go blasting through this. And the only other harmonic level that we need to keep in mind here is if we potentially Well, there's a few, I suppose. We could be thinking things like AltBat, so that's 113. We could also be thinking things like Crab, which is 1.618. If those play out, those are what they call potential reversal zones, and we can even just draw that on there. We want to be watching really, really closely for, M's, divergences in your indicators, fractals, all that kind of stuff. So there is the 88.6. 113 is up in this area. So we should probably keep an eye. And I'll just have this on the chart just for reference. So we should keep an eye on that area. And then 1.618, which would be Crab, would be all the way up there. So those are going to be my sort of let's watch how gold acts at these respective levels. And let's just be cognizant of the fact that if we do actually top out here, this could be actually a very big harmonic setup here. So just be cognizant of that, everybody. Okay, kind of a disjointed call this morning. I suppose, I don't know whether Jamie actually even got into his presentation in earnest, but I suppose Mr. Mayor will reconvene with Jamie and
Yeah, he's having hangout issues, so he can't even access the hangout right now.
Yeah. Well, and good old Google, I suppose this is how this all has to go, eh? So if you are watching this later on, Jamie, and of course I'll talk to you, hang in there, buddy. We really would like to get your presentation. So just, when you are available, we'll have you back on to do your spiel. And if anything, that's probably a lesson that Brian should just shut the hell up and let Jamie do his thing so we don't derail him. I suppose we'll just finish off today. Just quick boo at good old crypto and Bitcoin. I thought it was interesting that Mr. Mayor himself said that he was working a short off of Bitcoin. I think you were on Phoenix, weren't you? And I don't know whether you want to share a chart or not. But hopefully everybody can see this AM up here. I don't know whether it would have been enough for me to justify a trade on OKCoin. I think the Phoenix M came in a little bit higher. We talked a little bit about this in that broiler chicken show yesterday. I don't know whether you guys got to see it or not, but I was very, very impressed. There was one site person who came in and actually bought on the test of the 13 EMA. And in the lounge, he basically said, well, look at the size of that wick. I fully expect the market to try and work its way back up into that level. And sure enough, that's exactly what happened. Once we got up into this level, I think it should make complete sense to me. Hey, there he's back. Yeah, as I had said earlier, Jamie, and if you can't hear me, then don't sweat it. We'll get you on another day if you watch this video later on. It's all good. And your content is totally awesome. So we'll patiently wait for when you can. Moving averages still pretty well bullishly positioned here. I'm not really seeing any signs of outright failure. I wonder whether they pulled the market back here this morning. Didn't quite hit these candle body levels, but came very, very close on OK. And as I said, the mayor had a little short on. I think he took profits. I'll leave that up to him whether he wants to talk to you about that. I'm not ready to stick a fork in the market and call it done. We'd actually want to see these moving averages cross bearishly before we start, calling bear. If anything, I drew this, I like to call it squiggly line theory kind of idea. I drew this sort of, if this thing is going to top, what would I sort of like that top to look like? And you can even see that after drawing these moving averages and stuff, the market hasn't quite rolled over here yet the way I was anticipating them rolling over. We're still pretty darn bullishly set up here. So if anything, I'm almost thinking at this point, and this is, you've probably heard me say this before, I'm really thinking that this is this market's range bound for the time being, top of the range, bottom of the range. wicks and tails, trap bulls, trap bears. There's going to be lots of back and forth here. And if anything, maybe if we're lucky, we just get just a nice sideways market and give the market time to clean up the bear divs. You can see the OBVs rolled over here. Willie now definitely needs a good whack of time here to clean itself up. Do we break hard in earnest? I don't think we're quite at that stage to be calling that. I think we're still sort of stuck in this trading range. Tuesday, Wednesday kill zone's probably going to be the tell for us. And so just, it's just stuck in a range. And if anything, this isn't bad considering how bad the broader stock markets are looking. This isn't such a terrible thing. And then, same thing on Ethereum. Just basically sitting in a trading range. My market's in a malaise through the month of June. Usually we pivot through the end of June, beginning of July. I think last year, in fact, we actually even topped out first or second week of July. So we're still in the process of just asking whether this is still a bull. The internals do not look good here. Might even start getting little Davo sell signals. M in OBV, M in Willie RSI. So don't be shocked if we have to just play around in this trading range and explore the bottom end of the range here. I think, probably on balance, especially for something like Ethereum, 38.2s will probably act as some sort of support. But, actually level 2s just did this, right? Horizontal support and resistance. You can see that's a key low. That's a key low. Now we've got that panic dump key low. There's a bunch of support here sitting at this 30 SMA. So if all of this has to play out and we get Davos and stuff, I think it's probably a play on this inside bar failure. And my hunch is if there is going to be a trade here, it's probably going to be something like a 2-to-1. So we go inside bar. That is the trade of the inside bar. Jesus, this thing's fighting with me this morning here. There to there. So you sell the fail of the inside bar, and 2-to-1 on that would take us basically right down into these lows. So, if these Davos fire, Dav used to always tell me, absolutely have to do 2-to-1s. And you have to at the very least just force yourself to take partial profits at the 2-to-1 objective, move your stop to scratch if you want on the rest. Or if you want, just take 100% profits and just walk away. But looking at this chart, I think this makes sense. What do you think, guys? Does that seem logical? 30 SMA, key lows, all these tails, trap bears want release, 2-to-1 off the inside bar fail, Davo sell signals, bear div already working. If you wanted to take the trade, I think that's basically the trade. It's not necessarily something that I really want to do. I think that the moving averages are still pointing bullishly. They're in that bullish phase. The weeklies are still pointing bullishly. So from an old gnarly perspective like me, trend follower, I actually think pullbacks are actually buying opportunities. And kind of like what we saw on these bars, and especially on Bitcoin, we might see like flash crashes, right? So you want to have your stink bids working down below, see if you can get some cheap coin. I actually like that idea. Okay, I think we'll leave it at that for today. We're actually well past the top of the hour, so I hope you guys enjoyed the offering. If you are here in Vancouver, Riz is trying to drum up the crew. I think Andrew's back in town, right? Or is that our Andrew? Hey, Millie? Is that you over there? I think that's, mind you, we got a couple Andrews here. Adam, what did I say? Andrew. Okay, so that's not our local. We got two Andrews here. I thought maybe one of them are. Sorry. No, not local in Vancouver. Okay, I always mix up you, Andrew Milligan, and Adam Millie. Anyway, point of the matter here is if you are here in Vancouver, Reza and Adam and I guess Andrew, and myself are going to get together for a little get together tonight. So if you happen to be in town, you're more than welcome to join us. I don't know. Do we have anything on the docket for tomorrow? Maybe we'll take another whack at Jamie tomorrow. I don't know.
I think we have Julian and Adam on.
Oh, okay. Cave Bear's going to do his presentation, and we've got the baby powder report. All right. And actually, I really like this. So basically, the site is filling out lots of different content from lots of different contributors, and never a dull moment. Always something new to look forward to. Okay, why don't we leave it at that for today, guys? Thank you so much for your participation. I hope you enjoyed the offering. If you have any questions, of course, reach out. And actually, I have to get off to a dentist appointment soon. Uh-oh. Dun, dun, dun. Okay, have yourselves a great day, everybody. All the best. The only thing left for me to say here, I suppose I should always touch base. Alex, do you think anything that I said today was of any value to people?
Very much, sure. So,
I think everybody their assignment should be to go watch that Frontline documentary on Chinese economy. I think actually that's a good little homework assignment. Let's have a conversation about that on the lounge. All right, so we've got the mayor's blessing that today was half decent, as you can hear. Somebody is messaging me like crazy right now, so I guess I'm needed elsewhere. Have yourselves a great day, everybody. All the best. And the only thing left for good old Brian to say at this point is a big bye for now.